We want to welcome you to All Things Real Estate, brought to you by the GK Group. Now, here are your hosts, Brad Avergon and Gary Kelly.
Hi, everyone. This is Gary Kelly. I am joined by Brad Avergon. I am with Castanetti Realty Group, and Brad is with Fairway Always Independent Mortgage.
That's right, Gary. How are you?
Good. Real good.
Excellent.
You know, we're recording this on a rainy day. That's pretty, that doesn't tell anybody when we're recording it, but it seems like we're in that period of everything raining. You put down some fertilizer. I had some grass seed I put down. So it's all good, I think.
The lawn's getting a drink.
Yeah. Sue's complaining about the rain, and I'm like, oh, it's great for the lawn. Come on.
There you go.
So Brad, you're a senior loan officer.
I am.
Senior means you have gray hair.
I was going to say, I don't know if it means my refers to my age or my experience, but hopefully both.
I wanted to talk today about FHA loans.
Sure.
Okay, and basically ask the question, are they a good thing?
I think FHA loans can be a great thing in the right situation. I think of it as
define an FHA loan for those that are not aware.
Okay. So FHA is an acronym that stands for the Federal Housing Administration, and what it is it's through HUD, the Housing and Urban Development Department. And what they do.
And last check, are those departments still in place?
You know what? I'll be honest. We're doing a condo approval right now, and I'm anxiously waiting to see how long it takes to get back. When you do a condo approval.
We're having an issue with a home purchase up in Maine, and it's a similar kind of thing. The people that we were talking to aren't there to talk to anymore.
It's challenging because you really need quick response on these things. And when you just for reference, when you approve a condominium project, an entire project, you actually have to interface with HUD. And so you need those people in the right places. So we're waiting to see. And it's not known for moving quickly. That's government typically doesn't move quickly normally. So this is one of those situations you want to hopefully get.
And we're not a political show, so we're not going to go down that path.
That's right. But anyway, so yes,
the people you were working with have been doged. So.
We don't know. So anyway, but we're hoping for the best, as I'm sure you. But anyway, so what FHA does, the Federal Housing Administration does.
And the Federal Housing Administration, by way of background, since I looked it up, goes back to the Great Depression.
Wow. You know what? I would have just been impressed if you didn't say you looked it up. Say, God, your grasp of history, Gary, is amazing.
No, I'm not a history guy. They were put together to try to promote home ownership and construction, and you certainly seem like they've done that over the years.
That makes a lot of sense, Gary, when you think about it, because back in those years, you really had to save up a lot of money. There weren't a lot of the programs that are available now, the low down payment programs I'm talking about. And so, one of the features that FHA has that makes it attractive is it allows a 3.5% down payment. So there's a big difference, back then, maybe saving up 20% versus being able to save 3.5% and be able to put a down payment on a home. So I can see where they were really advantageous back then,
So it's now. That was then. This is now. And go on about the FHA programs.
So what FHA does is they actually, a lot of people think that they lend the money, that they right. It's an FHA loan is they lend the money. No, what they do is they insure the bank that they will be paid the money. They're an insurance company, similar to put an analogy, similar to PMI, private mortgage insurance. So a lot of people, when they get a conventional loan, if they put less than 20% down, they have to get PMI or private mortgage insurances. And what that is an insurance policy that says if this loan fails to perform, does not perform, and has to be foreclosed upon, the top 35% of that mortgage is insured. So in theory, you could sell that property for less. Well, FHA does the same kind of thing, what they do is they ensure basically the performance of that mortgage if need be. And as part of that, they collect fees in order to do that. And they have certain guidelines. So that's what they do. And then the banks generate those loans. Those are then sold just like any mortgage would be on the market as government-backed securities. And that's kind of, what they are, Ginnie Maes, as they call them. So they have certain qualities or certain aspects to them that make them very attractive that they are going to perform. And that's why they're well received.
So one of the things that I often hear when we present offers to a seller is they'll go down the list and they'll say, cash is king, that we understand. Conventional mortgage, okay. But then they get to things like FHA or USDA or VA, and all of a sudden they have a visceral reaction. And I don't fully understand that.
I think what it comes down to is when a seller's evaluating an offer, they're looking at what are ways that this deal can go bad? What are potential ways or risks that this deal could go south on us, that we're not going to sell this house for this price to these people on this particular date? And so that's why I think when you talk about, cash is king, somebody comes in with a cash offer with no appraisal requirement, no home inspection, the odds of that deal closing are pretty good, right? There's not a lot of what I call the escape hatches, so to speak, on a deal, right? The odds are going to put their down payment down. You're going to go to purchase and sale agreement pretty quickly and go forward. When you talk about a conventional deal, maybe you have a home inspection contingency and maybe you've got a mortgage contingency that basically says they have to get financing, in order to get this deal. But other than that, it should be fine. With FHA, there's additional layers that are required by the Federal Housing Administration as to the condition of the property. And so sometimes sellers can be a little nervous about that because, they can be things that maybe a seller's let go and not a big deal to them, but they can be a big deal to FHA.
There are homes, as we look in MLS, that basically say will not qualify for FHA loan. And I think we need to talk about some of the things that go into FHA approvals. It's my experience that, generally speaking, FHA is focused on safety issues. So I've had a home that had 2 pane glass windows. The outer pane was broken. Well, FHA was happy as long as we removed that outer pane of glass. So instead of having a 2-pane window, you've now got a single pane window. That was acceptable to FHA. They didn't want someone getting cut when they went in. Another favorite is hand railings. It doesn't have to be a fancy hand railing, but there has to be a railing there. And you see homes that have, I call it the FHA hand railing. It's a 2x4 constructed railing. The way railings are set up, they've got to be grippable. They've got to be continuous. You can do that with a 2x4. And so that's a case of closing low. I had one recently where there was a shed on the property. The shed, it was kind of decrepit if you want to know the truth. But the FHA appraiser came in and said, the shed needs to be repaired or removed. And the seller decided to remove it. That was actually okay with the buyer. The buyer had no designs on it. But once that shed was removed, it exposed that there was, in my words, a basement to the shed. Basement is overstated. There was a hole beneath the shed that, some people might call it a root cellar. I don't think it was a root cellar, but that hole needed to be addressed. And there was a lot of noise around that. Brad, since you were the loan officer on that one, any thoughts?
They're very familiar to me, Gary. I don't know why. Yeah. So this is one of those situations where it's very important when you do an FHA loan that there's high level of communication between the listing side and the selling side. And in this case, we had the communication, but there was, I'm not sure that the listing side was familiar with the fact that there was a hole under that shed. Because when you looked at the shed from the outside, it looked like a shed that was dilapidated and needed, could easily be could fall over.
Knock it down, couple guys or women, whatever, and throw it in a pickup truck and it's done.
It looked like a stiff breeze could blow it over, but nonetheless, a couple of folks with a pickup truck looked like they could take it down in a few hours. The surprise came when there was, in fact, a hole that needed to be addressed. So why did the hole need to be addressed? So first of all, the hole was substantial enough that it could pose a safety issue. And Gary, you hit the nail on the head. Could a child, and FHA really looks at pretty much a lot of the safety things from a child's standpoint. Could a child harm themselves? Could a child be running in that backyard and fall into that hole and hurt themselves? The answer was yes. Therefore, that needs to be remedied prior to closing. That's all. It needed to be fixed. And so, yes, there was a lot of noise about it. I don't think the seller expected it to cost as much once they removed the shed. They thought they were done, but then they had to come back and fix this additional problem. And that's, that happens. Unfortunately, sometimes it's important to have comprehensive understanding. Maybe the next deal we do with a shed on it, we may say, hey, just out of curiosity, is there a basement under this shed? Not something we've run into, but I've been doing this for 38 years and I've never seen that before. So that was...
I have to admit, I've seen a gazillion sheds. I've seen them moved. I've seen them put up on a flatbed tow truck and move to a different location. All that stuff. The basement, if you will, was a surprise.
Yeah. I think for everybody involved, maybe including the seller. I don't know if they were the original owners of that home. Didn't look like that cell had been used in a long time. But anyway, nonetheless, it was remedied and everybody came out well. But again, using that analogy about could it be dangerous to a child? It flows over into other areas of a home that's going to go with an FHA. So one of the common things, and you referred to some of them before, was peeling paint. Well, you can probably comment on the lead law in Massachusetts, but if a child were to come up and grasp a piece of peeling paint, as toddlers may do, and stick it in their mouth, could they be harmed for it? That's why peeling paint is a bit of it's a concern for FHA and one that needs to be addressed prior to closing. And I think it does, if I'm not mistaken, Gary, it does kind of play into that lead paint law, doesn't it?
Well, it does. And, no one wants to have a kid get sick. And at the same time, I saw actually a This Old House television show recently, and they weighed a container of paint and then a container of lead paint, and the lead paint was substantially more. It's not a little dusting of lead. There's a lot of lead in that paint, and so that's where the kids could get into it. Let's pick up with that after we pay some bills, Brad.
Sounds good, Gary.
Thank you for watching All Things Real Estate. We'll be right back.